Hello everyone and welcome back to Monthly Money Plan. My name is Jonathan and today we'll be discussing how to pay off your car loan fast. We have 6 steps to cover to actually pay off your car loan faster than the normal term, giving you an example and then practically how you can do it in your situation. If you enjoy these type of videos and you want to see more, please consider subscribing to the channel. We're trying to hit 10,000 subscribers in the first 3 months of the channel. But with that being said, let's jump into it. Our first mistake is paying just the monthly payment. Now you might be telling me, but Jonathan, that's normal. That's the payment I gotta pay. My budget's tight. I don't have anything more to give. Now there's 2 ways to examine this. You can either find room in your budget for extra money, or you can try to make a little bit more to make an extra payment. If you're paying just the monthly payment every month, it won't help you pay off your car faster. Step 2, if you're finding that you maybe don't have enough room in your budget to find an extra little bit of money to put towards your car, what you could do is switch your payment from monthly to bi-weekly. What it's gonna do is it's gonna help lessen the amount of interest you pay on your car loan by putting more of that payment towards principal. Of course, when you take out a loan with a vehicle, there's gonna be a principal amount and then a interest amount. The interest is obviously the bank's cut for supplying that money for you to buy that vehicle. So that is their cut for it. When you do bi-weekly payments, it's gonna help pay more of the vehicle off instead of giving it to the bank every month. If you haven't so already, check with your bank to see if they're able to refinance that and switch that to a bi-weekly payment. The average interest rate nowadays for a brand new vehicle is 6%, with the used market hovering around 9%, meaning every ounce of interest you can save will help you pay off your vehicle a lot faster. Number 3, segueing into actually how to pay that down a lot quicker, is to make an extra payment once per year. This can help drastically reduce the loan term because you're making a principal only payment and it's gonna affect all your other payments as they're amortized. Now, one thing to watch out for is instead of just putting an extra payment for next month, so prepaying your next month's payment, what you wanna do instead is actually contact your bank and ask them if you can put in a principal only payment. Now, some providers do this differently depending on which bank, but you're gonna wanna check with them the best way and make sure to mark it off that it is a principal only payment. It's not a payment for next month because you would be paying interest on that, but this would be going directly towards the vehicle. If your vehicle does have a prepayment penalty period, make sure that you're not setting any additional payments during this period. You wanna make sure that you're done with that period. Typically it's 6 to 9 months where you can't make any payments because the loan is front loaded. So you wanna just check with your bank to make sure that you're all in the clear. All right, next we're gonna look at an example of a vehicle that you purchased for $30,000, $0 down for 84 months. Now, obviously, I wouldn't recommend purchasing a vehicle with $0 down, but we're just gonna use that example for easy numbers. How this would look is on a monthly loan term of 84 months, your vehicle $30,000 with the normal payment plus an additional payment of $50 every month, which means over the course of that loan, instead of paying over 84 months, it gets reduced to just over 73 months. So you are saving 10 months of paying that loan back. Now, number 1, psychologically, this is super important for you personally. Paying off these loans quicker will add momentum into your life, into paying other debts off, and making headway into your investing goals. With that being said, if you do want to actually pay off your car quicker, instead of just paying $50 a month, let's use the example of $100 per month. So $100 extra per month towards your loan, instead of an 84-month loan, that gets reduced to 65 months. So you're paying less in interest, you're paying off the car quicker, and as a depreciating asset, it's not good to be paying interest on a depreciating asset like that, because it's just a double whammy of a lose-lose situation. Also, this process will help your credit utilization rate. With that, you wanna have less than 30% of your gross annual income used up with debt, which means that's all your debt. So house, cars, and as you pay off all your personal debts, paying off your car is typically a bigger one, using up a lot of your credit utilization, which might affect your interest rate on buying a home or your ability to buy a house if you're in the market for that. So super important to actually pay down all of your debts, including your car, as quickly as possible using the snowball method, the debt snowball, or adding an extra $100 a month towards that payment every single month. When using the debt snowball, let's assume you have 3 debts. You have a credit card, that's $5,000. You have a student loan, and that's $15,000. And then you have this car, which is $30,000. Total, you have $50,000 worth of debt and you make $60,000 a year. With that being said, you're gonna have to cut your lifestyle over a 1 to 2 year period to pay back this debt and try to earn a little bit extra. So then you're attacking the credit card. When you're done paying the credit card, use all of that money you're paying towards that, use it towards the student loans, attack the student loans. And then when you're done paying the student loans, attack the vehicle. Once you're debt free, you will feel so free. And the sixth and last point is getting on a monthly money plan. Now, super important, I teach my students how to do this in 30 minutes and how to consistently get to the budget amount that they need to hit their investing goals, pay off their debts, and build the life that they want in their retirement and currently with their family. So with that being said, with your monthly money plan, you're gonna wanna lay out all your finances and then follow my budget in the description below to actually create your first budget today. Once you create your budget, make sure that you see where you can actually skim some money and take that to pay off the car. Skim that money and pay off extra debt. And that's how you're actually gonna make headway. You can either earn more or you can spend less. Those are the only two equations that I've come across that I know personally how to use in my life to get better financially. So with that being said, if you enjoyed this video and you like this content, consider subscribing down below. We're trying to hit 10,000 subscribers in the first 3 months. So if you enjoy this, make sure to go down there, click the little red button, and I'm happy to see you on the next video. Thanks guys, see ya.